Yo. Okay, there we go. What's up, everyone? Sorry about that. My mic was disconnected. Basically, I'm going live to review price action today. It's going to be a short backtesting session. Nothing crazy. Probably going to be pretty short. But I just want to talk about what happened today before I do the market recap, kind of gather my thoughts, take some screenshots. We had a really nice 2022 model. This was during London session. And guys, look at how clearly we manipulate below midnight, taking out Asia low. Yep, there we go. And break of structure, and then you can see we have this fair value gap here. And then we expand to go run these low resistance highs all through here. And so this was very clear accumulation, manipulation, distribution. And yeah, I mean, this is just very textbook, like us manipulating below midnight. So this is the first thing I'm going to screenshot. And then you'll also note that my guess is if we measure this out, yeah, you can see all the standard deviations get hit. So yeah, just very, very textbook accumulation, manipulation, distribution. I guess technically no, it's a London low of day type of day where London pushes into London forms the low of the day, and then we expand through New York. So I'm going to go ahead and screenshot this. And I just think this is so textbook. I mean, going into the morning, I knew we were going to expand to go run all these highs. We get this beautiful inverse fair value gap. And if I had been on the charts at 906 or whenever this inversed, I would have loved to have taken this. But this was before I got on the charts. And then we don't really get an entry all through here, and we just aggressively expand. So what I would do if I were to do this day again is I am changing my rules. So I can take a trade before I get on the live stream as long as I still have trades from the previous day. So right now, if it's a loss, I can't trade anymore that day. If it's a win, I can go again. If it's a break even, I can go again. So let's say I took a win yesterday or a break even yesterday. I still have one more trade left from the day before. So theoretically, I could take this before I got on the live stream. That's going to be how I'm going to be doing it from now on. And I think that's pretty reasonable. But yeah, very clear accumulation, manipulation, and distribution. And you can see we also got SMT with this low too. So that's another reason this was especially good. So this was the trade of the day, and I just wasn't on the charts yet. So there's not much I could do. So I didn't take a trade, and that's okay. But yeah, you can see we get SMT. After a sweep of weekly high, would you have entered on the CISD or IFG? A sweep of the weekly high. Oh, to go back lower? We can take a look at that for sure. I don't like shorting at all-time highs, so most of the time I'm gonna not take those kinds of trades because I think, it's more risky. But if you have conviction, you could. I'm gonna have to take a look at it. But yeah, I think the trade of the day was definitely this inversion. Very textbook. Sweep of these lows with SMT. And I would have liked to have taken it. Like I said, this happened before I started live streaming. And this is just something that in the future, I'll allow myself to take this as long as I still have trades remaining from the day before. But the reason I would target this is I believe there was previous day's high in here. Yep. So you could take all off at previous day's high. And that's a 1.6 to 1. I think that would have been the ideal way to do this. You could also trail your stop. That's something that is very powerful is, if it's an obvious LRLR run, you can just basically say, okay, I'm going to take most off here, but I'm going to leave one runner. And then if you left one runner, then you could we would just keep expanding. So I'm going to go ahead and screenshot this. This is how I would take this personally, is just sweep, S&T, and then inversion. And once again, bias was bullish because we had a higher time frame manipulation in London. So I know that New York's probably going to continue. So inversion here. I'm going to go ahead and screenshot this. Yeah, I wouldn't have short. I would try just not to short at all-time highs for the most part, unless there's a really good low resistance liquidity run. But for the most part, I really do not try to short at all-time highs. So yeah, I also just want to show how this is accumulation, right? Accumulation, manipulation, distribution. So this is the first thing I'm going to screenshot. This was just very textbook here. And then we also had a 2022 gap in here, so I want to talk about that. Accumulation, manipulation, distribution. And also, like, theoretically, you could have left a runner to go target, like, the second standard deviation. But I probably would just go like this. So, screenshotting, here we go. So 906 IPG. Let's go ahead and put this in the folder. So 7-9-25 Wednesday. Yeah, if I was on the charts, I would have loved to taken it. I just wasn't, and so I didn't really get anything. But there were other ways you could enter. One of the preferred ways that I would have liked to have entered if I missed this inversion but I still wanted to get an entry is the 1 minute for value gap that formed, and I'm going to go over that in just a second, and I think that would have been excellent as well for an entry. So 906 IPG 3 minute. So like, let's say you missed this, right? You missed this 3 minute inversion. You don't quite get on the charts in time. So 9:15 comes around, and you still know, okay, well, we're definitely going to go run all this LRLR here. You can still tell we're going to go on this LRLR run. But you missed your ideal entry, which was that inverse or value gap, but you don't want to enter it late. This is what I would do, right? So we already inverse this gap, so you know bias is bullish. We have accumulation, manipulation of this low with SMT, and then we get a 1 minute break of structure above this high. So, if you still wanted to get an entry, I'm watching the first 1 minute gap that forms. And you can see that is right here. So, you could take it like this. 1 minute for value gap. This is your 2022 gap. And let's go ahead and go like that. And realistically, I think I would put stop loss. I'd probably put stop loss here. I mean, if you want to be super conservative, stop loss at stop. I'd probably just go there. And then you could just target 1-to-1, or you could be more aggressive, put stop here or even here. But yeah, I think it just depends on personal preference. I'd maybe put stop there. And this was a good way to catch it in case you missed that inverse or value gap. Yo, FA, what's up, bro? I'm just going over price action today, covering how you could have caught this low resistance liquidity run, even if you missed this inversion. We had this 2022 gap that formed. But I'm doing good. I'm just covering the market for today. Yeah, Jake, I'm trying to decide on an entry model, OB or IG. Personally, you just got to backtest, and for me, I found that I like IPGs, I like market maker models, so flow state, and I like change of state delivery, and I like 2022 gaps, and that's just what I like. I mean, that's for my backtesting. That's what works for me. That's what makes sense to me. So that's what I do. So you're just gonna have to backtest, and then basically you want the signature and price to be ingrained in your head, so much so that you just, when you see it on the chart, you just know, okay, this is a valid setup according to what I've backtested. And that's when you enter, right? So this is how I would probably take this 2022 gap, is realistically, I'd say probably stop at this. This would be a little tight. This would be the extra safe version. Probably just go like that. But bro, M1 50 wouldn't work catching pullbacks on the way down. What? 1 minute FVG. Yeah, because you have to understand the context, right? So you're basically saying you can't just enter on a 1 minute for VIA gap. I agree. You can't just enter on a 1 minute for VIA gap. You have to understand the context, right? We have SMT, we have a break of this high, and we have a ton of liquidity over here. We have all of these unprotected highs. So we know that this is probably going to be a giant stop run. So that's why this 1 minute gap works. This is not going to be a low resistance liquidity run. This just doesn't make sense. Why would you take one of these 1 minute gaps down when the draw on liquidity is higher? So I'm going to screenshot this. It's all about context. You can't just take any 1 minute gap. And once again, we got our bias from this higher time frame 2022 model that swept out Asia. So this was a 2022 model, 916. 916, 2022, 1 minute. There we go. So yeah, if I missed that inversion, I'd consider that. But the cool thing about this, guys, I don't know if anyone's watching. Is anyone still watching? Let's see. Oh, there's 4 people watching. What I mean is that when you check 1 minute inverse after FVG sweeping weekly high, they were getting stopped. Wait, what? Weekly high? Okay, you're talking about this. What I mean is that when you check 1 minute inverse at FEG after sweeping weekly high on pullbacks, they were getting stopped. Yeah, I would not have shorted this. Personally, I don't short all-time highs. That's just my own view on the market. I mean, theoretically, like, maybe you could, because this is all like a giant liquidity void. It acts like one. It's not actually one. Yo, what up, Snowman? So theoretically, maybe you could short, but I personally try to avoid shorting at all-time highs. It's just, for me, it's too risky. But theoretically, yes, maybe you could have taken a short. I just personally, I much preferred the longs in the morning and entering just on this 1 minute gap after we broke structure. This would have been the ideal entry. The thing is, I would have had to realize that within about a minute. And it's kind of hard to realize that in a minute. But then you can see we continue to expand higher off of this 2022 gap, and you could just trail your stop here if you wanted to. And you could even just trail your stop to go up to previous week's high. Could you imagine you just trailed your stop to go up to leave a runner to previous week's high? You would have banked. If you just instead, like, let's say instead of taking off, like, let's say you had, what would this be, 6 contracts. So if you just took 5 or 4 off here, and then you left a runner to go up the previous week's high, you would have banked. You would have so banked. So I'm gonna leave a note of that, like, take off 5 cons, possibly leave a runner and trail stop. Or you could just say take off most at end of LRR. You could trail stop and leave a runner for previous week's high. Because think about it, right? What's the difference between taking profit here and then removing the take profit and trailing your stop right here? Not that much, but you know it's a stop run, so the market should keep going. And so if you, instead of putting your take profit here, you just trail your stop, then all of a sudden you get all the rest of this stop run, and you can just keep trailing your stop up and up and up and up and up, and you probably wouldn't even get stopped out until like here. And if you wanted to, you could have been more lenient, and then this would have hit previous week's high. So that's the benefit of trailing stop. I know Haney was talking about that in my Discord. But yeah, very cool. That's That's why when you trail your stop with a low resistance run like this, it can be so valuable, right? So TP, I'm going to just mark this as possible stop trail. So not at the top, bro, but for later entries on pullbacks. Like halfway down, IFGs were getting stopped on 1 minute. Could you tell me the time? What time should I look at? And I'll look at it. So you could have just very possibly trailed this and then left it to go to previous week's high. But it's very obvious AMD. That's the other thing that's nice about this. And once again, you would know bias for the day because we manipulate Asia's lows with SMT during London. So that means that we're probably going to have London reversal, New York continuation. So let's go ahead and screenshot this. 9/16/2022. And then I'm going to put part 2. Or I'll just type runner. Okay. Screenshotted. So that was nice. And as well, if you wanted to get an entry for the entire day, you could have taken this 2022 gap. And yeah, very, very cool. Now, there are other trades you could take. Did I screenshot this yet? I don't think I did. But like the cool thing is when you sweep session liquidity with SMT, or if you sweep a previous day's low with SMT, that is really good for bias for the entire rest of the day. I mean, this is just really good for bias. If you sweep a session low with SMT, really good for bias. So I'm wondering. So I'm confused as to who to follow. What do you mean? Who to follow? What do you mean? Like who to study from? So this is cool, guys. This is cool. We have this rejection block here. See this on the 4-hour? This wick here. So 4-hour rejection block. I don't really know what you mean by that though, the who to follow. So we have this 4-hour rejection block. And where is it? Okay. So along with this being a 2022 model, this is a flow state because what happens here? 4-hour rejection block. So you can see we get SMT with this. And then 4-hour rejection block. "15-minute change of state of delivery." And look at how perfectly we react off of that. 15-minute change of state of delivery. See that? So many dodgy. Just do your own backtesting and just figure out what makes sense for you. There's a lot of misinformation and it's hard to know who to trust, and it can be really annoying. So that's why you need to go into the charts and backtest and just observe price for what it is. Are inverse value gaps making sense to you? Are market maker models making sense to you? Are 2022 gaps making sense to you? For me, all of them make sense. And I ignore everyone else. I ignore everyone else telling me, oh, I can't take a 2022 gap. Oh, I can't take a market maker model. No, I understand that the market respects all of the above. And I'm going to ignore people telling me that I can only trade inverse value gaps, because I personally see the market from more than one lens. And I just don't like... I just think most people don't know what they're doing. So why would I listen to people? Most people. That's just how I see it. Yeah. I would start with inverse for value gaps. So, yeah. 15-minute change state delivery. So 4 hour, 15-minute, and then this is a nice one to use because we sweep out a session low. So these are going to be extremely high probability trades, and so you can see here's the high of this range. It lines up with this fourth standard deviation. So this is a really good spot to take profit. Dude, you're a case in point. You seem to know all the different models, etc. Yeah, you should just hang out with me. You should definitely just hang out with me. And we'll get better together. So yeah, this is how you could take this as a flow state, and then this would be 4 to 1 if you took this like this. There you go, 4 to 1, and then you can see, yeah, see how this is 15-minute change state delivery. We manipulate below Asia and below midnight, and then we get 15-minute change state delivery. I could do a lot worse. I know for sure. I know that. What do you mean you could do a lot worse? I don't know what you mean. Okay, flow state retest 3:15 a.m. Not saying I would take this because obviously I wasn't awake, but I'm showing how this gives you bias. 4 hour, 15-minute. But yeah, going back, if I scroll back, this was also a 2022 model. So like, if I completely ignore this rejection block, if I just look at this like this, you can see that you don't even need that rejection block to know, okay, we swept liquidity, we got a break of structure on the 5-minute, so this is going to be probably a 2022 model. So you don't even need to have that. You could just take it like this, same thing. So two to 1 like that. You in the right place, Simon. Dude, yes you are, bro. Yes you are. We're all going to keep getting better together. We're going to keep showing up. And we keep getting better. We keep showing up. So like I said, we sweep out this sweep out session liquidity, break this high on the 5-minute. This is a 5-minute 2022 model because sweep, break of this high, retest of a fair value gap. So that's all you need for 2022 is sweep, break of old high, fair value gap. And see how all these highs are just like super low resistance, like they look like they're going to get ran. So you can target the end of this range here. Yo, what up, Haney? Welcome back, bro. Yeah, I'm just showing how this was a higher time frame 2022 model, which could have given you bias going into the day. So I'm going to screenshot this real quick. Man, today was a beautiful day. And there's something I want to show you guys, but I think I'm going to wait for the market recap because it is really, really cool. So screenshotting this. So once again, this was a 3 a.m. 2022 model on the 5-minute. 5-minute. Boom. There we go. Very cool. Let's go. I didn't even look at the charts today. Yeah. I I wanted to take a trade within here, but it was like there was only a couple opportunities, and you had to basically be on the charts before 11:15 Eastern, and I wasn't. So, or 9:15 Eastern. A lot of people saying a lot. I have to read all this. First, Simon says, I can be useful idiot asking dumb questions. Yes, no, ask me as many questions as you want, guys. I'm here to help you guys just as I'm here to help myself. Like, I'm helping myself, but I'm also wanting to help you guys because I've had to, it's taken me so long just to, like, learn most of the stuff that I've learned. So I just feel like I hated having no one to ask. So please just ask me stuff because, yeah. Enjoying life right now. Let's go. W, bro. Yeah, I think the ideal way to take this though for the day was definitely this inverse value gap. You would have to be on that on the charts right at that exact time. Another thing you can see here is this was a 2022 gap on the 3-minute. So I'm gonna mark that up. Just now noticing that too. So 3-minute sweep and break. Very clean price action. And so, who all's watching right now? Is anyone still watching? Because if so, I'm gonna cover how you could have known. Am I still streaming? I don't know if I'm still streaming. Did I stop streaming? I'm trying to. Hang on a second. Is it showing up that I'm streaming? Okay, there is 5 people watching. So, I'm going to show you guys how you could have known that this 2022 gap was higher probability. I was thinking about waiting till the end of the market recap. But I'm going to show you guys now. First, I want to screenshot this 2022 gap on the 3-minute. Yeah, I'll explain that's what I'm going to explain. Yeah. So, first I'm just going to screenshot this. It's so cool, man. It's so cool. So, here's that sweep, break of structure, 2022 gap on the 3-minute. I'm going to screenshot that. Just to show that this was also on the 3-minute. So, I'm going to explain the Enigma thing. So, I was thinking about waiting for the market recap, but I'm just going to explain it now. 9:15 2022 gap 3-minute. Okay, so you guys are probably thinking like, bro, what is Jake going on about? Basically, when I say Enigma, all I'm talking about is a 2022 model, but specifically you're gonna know which 2022 gap is going to be higher probability because there's specific levels that the gap is higher probability to form. And you have to get this PO. I think it's like I don't know how it's called the Goldbach levels, right? Basically, it's dealing ranges where it's like the market maker models are likely to form. So basically, just understand that it's gonna tell you where the most likely area is for the 2022 gap to form. So you can see the market maker model forms on the low of this dealing range, right? We come down, we sweep session liquidity into the low of the dealing range. That's that red line. And then our fair value gap for the 2022 model forms. So wait, I'm going to wait for it to load. our fair value gap that we want to use for the 2022 model, so we get SMT with Asia's low at the bottom of the dealing range. Our 2022 fair value gap forms for the 2022 model forms within the fair value gap region of the dealing range. So you can see that FV stands for fair value gap. And this is where we're looking to see where our 2022 gap is going to form. And you can see it forms right here. So this is going to be a higher probability 2022 fair value gap. You can see that literally this is like it's only going to work when it's stupidly obvious, right? So a lot of time it's not going to work, but other times it will work, and it's specifically when it's just stupidly obvious, like, yeah, this is a market maker model that is respecting this dealing range. Like, this is 100% obvious, undeniable. So we get a sweep, break of structure, the fair value gap forms in this partition, and so because of that, we expand to the opposite side of the dealing range, and it has to make sense because of liquidity as well. It's only going to work when it makes sense because of liquidity, and it fits, the market maker model is fitting the dealing range perfectly. But when it does, then you're going to get the market's going to respect this. So that's kind of what I wanted to show. This is basically ICT's Enigma, but they don't really talk about it much because no one really knows about it, and yeah, it's a secret. So I'm going to screenshot this. But yeah, look at how we sweep Asia low, fair value gap forms in that fair value gap partition, and then we expand to the opposite side of the dealing range. Boom. But that basically is just like, where's the 2022 gap likely to form? Well, it's this is a higher probability region. Hopefully that made sense, guys. Look like the entry as a retest of the IFG. What? Could you say what time? So this was at, yeah. So this is 3:15. Enigma. 5 minute. And basically you're gonna, for what dealing range you're gonna want to use, right? You're gonna have to go into the settings. So there's different dealing ranges. This one was on the 243, but you gotta switch these to figure out which one you want to use. So, but I'm gonna save this as 243. So there we go. Boom. I wonder if anyone's even still watching. People are probably like, bro, he's just going crazy right now. But dude, did the market respect it or not? Right? The market clearly respected it. So I just go off of what makes sense to me and observing price action for what it is. The market clearly respected the fair value gap within that dealing range, and then it went to the opposite side of that dealing range. So if the market's respecting ICT's Enigma, I am going to trade using it because clearly it works. Like, I just say it, like, if ICT didn't work and it was just some other algorithm, I wouldn't give a crap about ICT. But because the market moves because of it, I'm going to use ICT concepts. Like, this is just common sense to me. Like, I don't give a crap whether ICT can trade or not. His concepts are how the markets move. So that's why I like ICT, right? Okay. Anyway, one reason I think that we are still expanding to the upside, actually, is we ended up getting a 4-hour candle body close above all-time highs. So it's just like, we're probably not going to manipulate back or distribute back down, because why would they let the candle body close above all-time highs? Oh, let's see. Someone commented something. What? It did not. Okay, I'm gonna have to reply to that comment later. Let's go ahead and keep. I don't know. Those are the main things I want to talk about. You learned that Enigma in his video? No. I learned Enigma from Aircam. Go look up Aircam on YouTube. Aircam Trader or something. He's sick. Go watch some of those videos. But yeah, definitely recommend checking that out. But yeah, what was I gonna say? I'm still getting better with it. Like, I don't totally understand it all the way. That's why I was so scared to, like, even say that I knew it for the longest time, because I wasn't sure if I really knew what I was talking about. But, like, after a while of seeing that work over and over again, you kind of just get to the point where, like, yeah, I'm going to have the confidence to say, like, I actually do know that that's how the markets move, and that's Enigma. So, yeah. Okay. Let's look at more price action. What else? Other trades you could have taken within here. I mean, this was very obviously accumulation, manipulation with SMT. I guess let's take a look. Maybe there was a short opportunity. So let's take a look. And because I know you guys are wanting me to take a look at that. We take previous week's high. So previous week's high gets taken. Now, I didn't think there was going to be any more opportunity, but standard deviations. What about standard deviations? So, what did you guys say that you thought you saw? You thought you saw an inverse for value gap here? I don't know. Personally, I don't like shorting at all-time highs, but I will admit this is straight up. This is all like void here, right? So it makes sense that we went straight back down. I mean, those are the main things I noticed about today, guys. Standard deviations and OTE on the previous trades. Oh yeah, we should measure that out. Yeah, we hit the second standard deviation perfectly, and then fourth standard deviation lined up with these equal highs. And here we did get an OTE tap right here off of this 15-minute change of state delivery. So yeah, guys, today was just so straightforward, and it's like I love and hate days like today because I didn't get a trade, but I did know exactly where the market was going. It was really obvious. So the main thing is, when I got on the charts, another way I could have taken this is I literally could have just said, okay, this is accumulation, manipulation, distribution. I'm going to enter to go take out this liquidity because this is a, let's see here. How could you have taken a trade if you didn't, let's say you didn't have a 2022 gap and you didn't have that inverse for value gap? I'm wondering, would you guys consider, if I traded, I would have won. So sad. Yeah, dude, today was so clean. What is Forever model? So that's the model Justin Weiling uses, and it's literally just flow state with SMT. It's the same, but he calls it Forever model. Flow state, it's just market maker models. So anytime you have a higher time frame gap, like a fair value gap, like an hourly fair value gap, and then a 5-minute change of state of delivery, after sweeping liquidity with SMT. So like, I'm trying to find an example. Let's go to the bottom of this range here. So like, for instance, 4-hour gap. I was just looking at this 4-hour gap. 4-hour fair value gap. And then I'm wondering if we got S&T. I don't know if we did. I actually don't know if we did. Okay, this one doesn't have SMT, but this is still a flow state. So it's not forever model, but it is flow state. We sweep out these lows. And then, so accumulation, right? All this is accumulation. Manipulation below this low here into that fair value gap. So then on the aligned time frame, we get change of state delivery, right? So what's the aligned time frame with the 4 hour? 15 minute. So right here, this is 15-minute change of state delivery where we get a candle body close above this up close candle here. So all of this, when we tap this, all of this is accumulation of long orders at the change of state delivery. All of this. As we see how they don't let the bodies go under here, that's because they're accumulating longs. That's why they don't let the bodies go under here. So 4 hour gap, 15-minute change of state, and so then I actually wonder if we tested OTE here. Yep, perfectly. Literally perfectly we do. The market just is perfect, guys. Right to the sweet spot. Absolutely insane. So we backtest OTE there. And then here's this 4 hour gap. Up to perfectly the first standard deviation, second standard deviation. So and when we went to previous week's high, we'll probably go to the fourth standard deviation. That looks like where we're drawing right now. So and then we get SMT here. At the change of state. And right up to previous week's high. So 4 hour gap, sweep of liquidity, accumulation. I mean, you could even mark this whole entire thing out as accumulation. It depends how you want to do this. I guess you could just mark it like this. So accumulation. Oh, and guys, check out this. Let's see. Might be better to use this. Okay. So you see how we go perfectly to... So the accumulation is better drawn out like this. See how we go perfectly to the -1 of this accumulation? So you can do standard deviations of accumulation ranges. It's not just manipulation moves. You can do standard deviations of accumulation ranges. So here you can see -1, and then that's exactly where the low formed. See that? The low forms right there. And so where are we drawing? We're probably drawing to the +1 of this accumulation range. So right here. So accumulation manipulation, change in state, and now distribution. Boom. Market is in the manipulation phase, right? Of what time frame? Right now it's in distribution. Right now we're distributing. So accumulation, manipulation, change in state, inducement, so inducement here. Now we're distributing. Accumulation, manipulation, distribution. We're distributing up to back up to all-time highs. So, yeah, very cool. So I'm going to screenshot this. Oh, from the past month? Okay, we'll take a look at the past month. Let's do that. Okay. I'm going to put this in here as weekly AMD. All right, let's take a look at the past month. It's an interesting thought. Let's do that. Let's see. Dang, is there actually still 5 of you watching? That's crazy. If so, that's crazy. All right. Yeah, let's talk about this past month. So, on the highest time frame, so if I zoom out to the weekly, you can see this was a weekly fair value gap here. So weekly gap. So there we go, weekly fair value gap. And then we sweep out this low in the gap. So you can frame this as a buy model, right? Weekly gap, liquidity sweep. So we drop down to the 4 hour because that's the aligned time frame. So weekly fair value gap, liquidity sweep. Here's our 4 hour change in state. 4 hour. So there we go, 4 hour change in state. See, we backtest it perfectly right here. So lately we've been in distribution because this was manipulation. So I knew. So do you use Smart Money Concepts, ICT? I use Smart Money Concepts and ICT. But I also just use common sense. Like, it's a lot more than just ICT, because I wouldn't use ICT if it didn't make sense to me, but it does. So here you can see we had accumulation, manipulation into this weekly gap. So this was manipulation. Now we're in distribution. We retest this change of state. Here we have inducement below the low here. So there you go, inducement. Yes, I trade, bro. I trade. So inducement below the low. And then what is this? Yeah, this is a 4-hour change in state. Yeah, I just trade ICT because it actually just makes sense. Not because, you know, I'm praising ICT, just because it's the truth. I just trade the truth. So yeah, 4-hour change state, inducement. So you can measure out this. So here's first standard deviation. We're approaching the second standard deviation of this range here. Or I guess we're in it right now. So we might retrace off of this, we might not. We'll see. And you can see here, we end up tapping OTE right here. Boom. So here's manipulation. Here's OTE tap. Here's inducement. Here's 4-hour change in state. And then we distribute. So right, yeah, we've been in distribution. So you see how this is a market maker model here. Boom. So this would give you bias. So I think that about covers it for this. I think I gotta go. Well, I guess I could keep going. Daily chart is more clear. Really? All right, I'm gonna screenshot this. So this is our higher time frame chart. Okay. Daily chart. You're saying daily chart is more clear. Signing off for now. See you, Simon. Thanks for coming. This was chill. We're just gonna keep getting better and keep locking in. So anyway, yeah. Look at how we closed this monthly candle above all-time highs. So right now we're in aggressive distribution, and we're probably gonna continue to distribute higher. Probably. I don't know for sure. Could be wrong. Hey, what up, Arjun? Look at this 3-month close. That's crazy. That 3-month close is crazy. Wick and then pop back up. So on the lower time frame, look at this daily gap here. Actually, I kind of want to take a look at this daily order block. NQ is wild. Very true. Yeah, look at, we pushed into this daily order block. So, boom. Now we are expanding off of it. Ooh, we got SMT with YM here. That makes a lot of sense. Look at how we get SMT with YM here. So yeah, we sweep out the low. So, boom. So, we get SMT with YM here. Let me know if you guys disagree with me at any point, and I'll try and alter it. But daily OB, 1 hour change in state. Look at how we backtest this 1 hour change in state, guys. So accumulation. That's classic CRT, yeah, bro. It really is. I mean, wait, let's see what time frame you're talking about. Oh, yeah. Sweep of that. You mean this daily candle right here? Sweep of this daily candle? I'm assuming you mean the daily candle. Okay, accumulation. I like drawing it out like this a little better. So accumulation. Yeah, the daily candle was nice CRT. So we don't quite go to that. And drawn liquidity is the high. Yeah, it does seem like it. So accumulation, manipulation. And now looking to me like we got this daily change of state delivery retap. I like using this one personally. I mean 1 hour change in state retap. It's going up, bro. Yeah, I can see. I can see that. Okay, daily order block here. And then 1 hour change in state. And yeah. So far, we are continuing this expansion. Measure this out perfectly to the second standard deviation. So second standard deviation hit. OTE tapped here. OTE tapped here. And yeah. I don't really love using order blocks for this, for the market maker models, but, you know, it's decent. Okay, I think we're long BTC, IFG there. Let's take a look. Let's take a look. You sent it? Okay. Well, I want to see if I can spot it and see if I can see what you're seeing. Okay. So daily 1 hour model. Let's go on let's go on Bitcoin. IPG. Dang, we're at 111,000. Wait. Do ETH 2. FA's in. FA's in. Okay. Oh, yeah. I think it's this 5 minute. Are you shorting? So FA, you're shorting? I hate shorting after pumps, but you might be right. Or are you longing? ETH going to 2,800. Oh, yep. Looks like we already tapped it. Alright, I think I'm kind of maxed out on analysis right now, but I might come back later on and do more recapping of the day. Yeah, there's a lot of opportunity today. Good day today. Sucks that I couldn't catch anything, but you know what, I'm gonna keep getting better. I'm gonna keep showing up, and one day at a time. I'm gonna head out. I'll see you guys later. Peace out. Well, yeah, I may or may not live stream in a little bit. I don't know. I think I have to. I think my family's driving somewhere in just a bit, so probably can't right now, right away, but maybe later sometime. See you guys.